There are a couple important factors that can affect a trader's profitability. One of them being sizing. When is it actually the right time to size up and when is it the right time to size down? That's what we're going to be talking about today. So let's dive into when to size up and when to size down in trading. Trading is not just about taking the same size over and over again, trying to make the same amount of money every day. You need to look around and make sure that the area is clear for you to take on a bigger risk. I'm going to list a couple of scenarios for you guys to pay attention to before getting into a trade. Number 1. Do we have any important economic news? If we have a heavy news week with several important events like CPI, FOMC, PPI, Powell is speaking, non-farm payroll, unemployment claims, things like that, should you really be sizing up on a week with all this news? Absolutely not. This is when you need to be playing the defensive side. So don't go around trying to FOMO yourself into trades on key news weeks like these. Key news weeks often lead to extreme volatility or extreme choppiness. So we're really just going to want to stay sized down during this period of time in order to avoid all that volatility and choppiness. Because if our trade goes in the wrong direction, we can potentially lose a lot of money. Number 2, do we have any earnings coming up? You want to avoid trading stocks when they're reporting earnings during the week. But if you are going to trade a stock that is reporting earnings, make sure that you are heavily sized down. This is because implied volatility is going to be high and any pullback can make your premiums lose a lot of value. So make sure you're extra careful when taking trades during an earnings week. And even after they report earnings, still maintain that small size. Number 3, Fridays. Think about sizing down on the last day of the week. This is when the contracts are going to expire by the end of the day. Trading options isn't like trading futures or Forex. There are several factors like the Greeks that affect the pricing of your premiums. The closer we get to the expiration of the contracts, the more volatile the premiums are going to be, and it's going to be a lot more higher risk. Number 4, sizing up when a setup looks A+. When everything is telling you that you must get into the trade, that's when you need to size up. For example, Meta is showing lots of strength pushing towards the upside with lots of momentum, but SPY is consolidating. This is a great confluence for you to size up on a trade, because this is showing you that the market is consolidating while Meta is just pushing towards the upside aggressively. When SPY is done consolidating and makes any small push to the upside, Meta is going to skyrocket to the upside as well. This is when you can take the chance to size up heavy on this trade, but make sure your risk is still managed with a stop loss in place. Number 5, you guys are going to want to size down on intraday setups. Intraday setups are more of a last second sort of trade, and they're not exactly pre-planned during the pre-market. So when you're developing a trading plan for an intraday trade, really, you guys are just going to want to size down on this trade because it wasn't originally part of your trading plan. So when you take the trade, make sure you're sized down, have a stop loss, manage your risk with profit targets, and all that good stuff. You usually don't want to go around taking full size on intraday setups because they're not usually set up on the bigger time frames. They're more so set up on the 1 minute, 5 minute, 15 minute, whatever. So overall, it's better to just stay sized down on intraday setups. Number 6, the last scenario where you guys would want to consider sizing down is if a trade has too many red flags. An example here would be like if we're watching Nvidia to the upside, but the market is also pushing to the upside the exact same way, then this is kind of a red flag for us. And if we do end up taking this trade, we should probably size a little bit lighter on it because it's not showing us every single green flag to get into the trade, like market divergence, extreme strength, momentum, things like that. So next time you guys witness any red flags before getting into a trade, just make sure that you guys are sized down. I hope you guys enjoyed this video on learning when to size up and when to size down. Make sure to like, comment, and subscribe to Stock Hours. I'll see you guys in the next one.